Good evening, everyone. I'm your host, Brian. Before I start, perhaps I have a quick sound check. Can you all hear my voice clearly? Am I audible? If audible, you can perhaps tell me to type number one in the chat box if you can hear me clearly. And if you can see the screen, type one in the chat box as well. I believe you all can see me, okay, see my screen and also hear my voice. So first of all, appreciate all of you attending for our webinar tonight. And let me introduce before I start the session. So I'm Brian, your host for tonight, Capital Sendirian Berhad. Throughout the session, do not hesitate to type your question in the chat box. And since tonight we have two speakers with us, one of them is Mr. Marcus, and the other one is Mr. Derek. So when you type your question in the chat box, in the Q&A chat box, remember mention who you wish to address this question to. So after the end of the session, I will help you all to address the question to the speaker. All right. Next, before we start the session today, this is a disclaimer for you all. This presentation has not been reviewed by Securities Commission Malaysia, and it is provided solely for general information and learning purposes. And it does not recommendation. We are not liable for losses arising based on this information. So kindly seek advice from qualified advisor or dealer before making any investment decisions. We have them all around, and you can reach to us easily at Philip Capital. Next, I will brief to you all a little bit about Philip Capital, our company history. So Philip Capital Sdn Bhd incorporated on 7 October 1995. It is wholly owned subsidiary of Philip Capital Holdings Sdn Bhd, formerly known as Philip Futures Sdn Bhd. It is also a trading participant of Bursa Malaysia Derivatives Berhad, holder of Capital Market Service License (CMSL), participating organization of Bursa Malaysia Securities Berhad. Capital, we have branches all over Malaysia. We have 11 branches in Malaysia, and our HQ is at KL. For Sarawak, we have Cebu and Kuching, and for Sabah, we have one branch, which is Philip Capital Kota Kinabalu. Here are some of our awards that we get before. For 2023, we managed to get second runner-up for best overall derivative trading participant. And the same year as well, 2023, we get first runner-up for best retail derivative trading participant. And we get first runner-up in 2021 for best institutional derivative trading participant. In 2018, we get champion for best trading participant in commodity derivative. Here is our global network. For your information, Philip Capital is a multinational company. So we have branches around the globe, around the world. We have 15 branches in the world, including Singapore, UK, and so on. So Singapore is our headquarters. Here is our global coverage. Due to Philip Capital is multinational company, so we managed to have coverage, which means our client enjoy the benefit of trading with a lot of different exchange in the world. Some of as you all can see here, we have exchange from UK, US, Hong Kong, Malaysia, Singapore, and so on. Philip Capital is one-stop solution for your trading. Why? Because we did offer three products. Futures, we cover for index, agriculture, metal, energy, interest rate. And then for stock, we have Malaysia, US, Hong Kong, Singapore. Contract for difference, we have USA as well. And then NYX, New York, business, index CFD, and last but not least, commodities CFD. Philip Capital is your broker of choice. Why? Because we are award-winning multi-asset broker. We provide 24-hour blocking and execution support. We provide advisory services. We provide latest market news. We provide wide array of products. And most importantly, we don't have any platform fees if you trade with us. We also provide free one-to-one coaching. It covers for the three products that I mentioned just now: futures, CFD, and stock, product knowledge, platform coaching, and charting system, or we call as technical analysis. Winning market calls to know about market view, market updates, or live counter technical analysis. Do join on the time that mentioned above. And here is upcoming seminar and webinars. If you all still want to see me or you want to see the speaker tonight, Mr. Marcus and Mr. Derek, you can register for our upcoming events. Just scan the QR code. Who knows, in the future, you still have chance to see us. And Philip Capital, we did provide online account opening, of course. Everything can just be done in online for our three products: stocks, futures, and CFD. Here is a briefing for our company trading platforms. Nova basically trade for our futures. So all the things that should have, we have, like 90 technical indicators, buy and sell directly from the chart, market depth, so on and so forth. And for your information, the chart is powered by TradingView for our Philip Nova, the platform to trade the futures, which means all the benefits, all the technical analysis, the indicators that you are able to use it in TradingView, you can also use it in our platform because it is powered by TradingView. I believe it is a big benefits, to the people who is very familiar with TradingView. And this platform is for our stock platform. We call as Poyens Global 2.0, Poyens Mind. So we have all-in-one watch list, charting indicator, exchange, top 30 mover, so on and so forth. And here is a promotion regarding our US stock promotion. So right now, if you invest with us for our US stock and ETF, minimum charges is 0.02% or minimum USD 3.99. And what do we offer to you? We offer free US live market data, no platform and custody fees, and we also offer weekly market calls for you all. And this is our last platform for today. Our basically used for trading CFD. So all the indicators, all the charting, we all have in this platform as well. And here is a little bit promotion as well. We have SGX Asian Index Futures. For this particular futures, you all can trade as low as USD 1.88. And it includes Singapore, China, Taiwan, Japan, Indonesia, and Vietnam markets. The promotion period is from now until 30th of September 2025. If you all wish to know more, can scan for more info, or after the session, you all can get the info from us as well. Okay, anytime approach anyone from Free Capital. This is our Singapore stock promotion. If you trade with us for Singapore stock, the brokerage fee is as low as 0.1%. And we provide free real-time level 1 market data. The period is from now until 15th of July 2025. Again, if you always to know more, can scan the QR code. Now, let me introduce to our speakers tonight. We have two speakers tonight. First speaker is Mr. Marcus Ng. Mr. Marcus Ng is the Vice President of Cross Asset Listed Distribution, Asia Pacific as Societe Generale. He is responsible for the product management, sales, and marketing of the Daily Leverage Certificates in Singapore, together with warrants and callable bull bear contracts in Hong Kong. Prior to this role, Marcus spent over 7 years at SGX, managing the range of structured products listed on the securities market and driving the distribution of research content after graduating from the SGX Management Associate Program. Our second speaker is Mr. Derek Dunn. He is founder and principal trainer of Timing and You Pte Ltd. He is an active trader and investor since 1999, specialized in fundamental, technical, and cycle analysis. As the founder of Timing and You, he used CA, cycle analysis, to guide investment decisions by identifying market patterns. Derek has made several accurate predictions, including 2015 loss in oil and gold, Brexit in 2016, and Bitcoin's bottom in 2017. He also predicted the 2018 US 2019 gold rally and 2020 COVID-19 market crash. He now forecasts a final US stock market surge before 2025 bear market. His proprietary TNY relative risk index risk and rewards, and he advised high net worth individuals across Southeast Asia. In 2019, he was named World Excellent Young Leader by Yangzhou Zhoukan for his contributions to global asset strategies. Without further ado, let us invite Mr. Marcus and Mr. Derek Dunn. Mr. Marcus, the floor is yours.
Thank you very much, Brian, for the introduction. Good evening, everyone. I hope you can hear me clearly. Let me just share my screen first. Okay. All right. So, good evening, everyone. My name is Marcus. I'm from Society General. All right. So, today we are here to introduce to you a very interesting product that is listed on the SGX securities market. It is called the Daily Leverage Certificates. So, for us, Society General, we are the issuer of these daily leverage certificates that are listed on the SGX securities market. All right, so it's listed in Singapore on the SGX market, but given the close proximity to Singapore and Malaysia, we think that this product could be very interesting to you as well. So we have a lot of traders in Singapore who have daily leverage certificates already. It's been around for the last 8 years, all right, and we've been expanding the shelf over the years to cover a wide range of DLCs that can offer you exposure to not only Singapore stocks but also Hong Kong and US stocks as well. All right. So today, in a short 15 minutes, I'm just going to give you a quick introduction of the DLCs, and then thereafter that, I will point you to where you can find out more about the DLCs that you can trade through Philip, via the Singapore market. So you can trade through Philip to access the Singapore market and access these DLCs as well. All right. So the DLC stands for Daily Leverage Certificate. It's a fixed leverage instrument. So very much similar to your leverage and inverse ETFs. This is a fixed leverage instrument, exactly the same kind of payoff as your LNI ETF or the leverage and inverse ETFs. These DLCs have exactly the same kind of payoff as LNI ETFs, giving you that 3 times, 5 times, or 7 times leverage performance on the underlying assets daily percentage performance. But compared to LNI ETFs, the DLCs can go higher in terms of leverage. Most leverage is usually capped at 2 times or 3 times, but for the DLCs, we can go up to 5 times or 7 times leverage because it's in a certificate structure and not a fund structure. All right. So the DLC is short DLC. So either 3 times long, 5 times long, 5 times short. It allows you to trade both directions of the market. With the market volatility that we've seen in the last couple of weeks or in the last couple of months, I think definitely having a long short instrument like a DLC available on hand will come in very handy to navigate the market volatility. All right, so these DLCs are all listed on the SGX market, and you can trade it on the SGX just like a stock. So you can access them and trade them the same way that you would trade your DBS shares or UOB shares. You can trade the DLCs on the SGX similar to how you trade Singapore shares. So SocGen, we are the issuer. We are also the liquidity provider. We are also the designated market maker for our DLCs that we list on SGX. We will provide liquidity throughout the trading day for you to buy and sell. And other volumes will be there for you to buy and sell the DLCs. All right. So the DLCs, we've been expanding the DLC shelf over the years to cover a wide range of markets. Right. So through this DLCs listed on SGX, you can access Hong Kong market, Singapore market, as well as the US market. All right. So we have the 5 times and 7 times, 3 times, 5 times, or 7 times DLCs on the index, the key indices. So your Hang Seng Index, your Hang Seng Tech Index, Hang Seng China Enterprises Index, your STI, your Nasdaq, your S&P, your Dow Jones. For us, SocGen, we have up to 7 times leverage DLCs on this key indices. 7 times long, 7 times short, up to 7 times DLCs for you to trade these indices. The single stocks wise, for the Hong Kong and Singapore single stocks, we have 5 times long DLCs, 5 times short DLCs on your Tencent, Alibaba, Meituan, your DBS, UOB, Sembcorp, Capcorp. We do have 5 times long and short DLCs on them as well. And most recently, we have extended the shelf into US single stocks. So your Nvidia, Tesla, Apple, Microsoft, Google, Amazon, Meta, your Magnificent 7 US stocks. We do have 3 times long and short DLCs on these US stocks that we just launched last year as well. So this is a very interesting shelf because it offers you Asian hour exposure to the US stocks here on the SGX using the DLCs. So it's something that's a first in Asia, a market first, and definitely very interesting for you guys who are looking at US stocks. You might want to consider this US stock DLCs as well. All right. So let's go to the basics of DLCs first. How does the DLCs work? The payoff of the DLCs is very much similar to the leverage enablers ETF, which I shared just now. So it's a very simple payoff where, for example, if DBS is up by 2% today versus its previous close, then my 5 times long DBS DLC will be up by 2% times by 5, 10%, while my 5 times short DBS DLC will be down by 10%. Alright? But if DBS was down by 2% instead on day 2 versus day 1, then my 5 times long DBS DLC will be down by 10%, while my 5 times short DBS DLC will be up by 10%. Alright, so this happens every day on a close-to-close basis. You get that 5 times performance of the underlying stock or underlying index daily percent. For example, over here is a 5 times long Alibaba DLC. So you can see over here that Alibaba was up by around 3.5% on this particular day on the 14th of March at around 1:45 p.m. Alright, so Alibaba was up by around 3.5%. So my 5 times long Alibaba DLC DKPW was up around 17%. So that's where it's around. That's where the 5 times performance is. On a close basis, you get 5 times performance of the underlying stock or underlying index daily percentage performance. Right, so the DLC, the name of the DLC, you can tell over here, you can tell a lot about the DLC in the name itself. So the DKPW is the stock code of the DLC. So if you go into your Poem trading platform, you look for DKPW, you'll be able to find this Alibaba 5 times long. In the name itself, Alibaba, the underlying asset that the DLC tracks will always be at the start of the name, followed by the leverage factor, whether it's 3 times DLC, 5 times DLC, or 7 times DLC, the leverage factor will be in the name, followed by whether it's a long DLC or a short DLC. So remember, if you're bullish on the underlying stock, you buy the long DLC. But if you're bearish on the underlying stock, you think your price will go down, then you will buy the short DLC. All right. And then your name, you can see that SG. SG stands for Society General. We are the issuer of this DLCs, followed by the expiry date in year, month, date format. All right. So this is the name of the product, and you can see that the DLC is priced usually around 20 cents to $2, so it's at 90 cents. All right. So the DLC price is different from the underlying mother share price. So you move in tandem with that 5 times performance, as you can tell over here, where this long Alibaba DLC moved around 17% on the back of Alibaba gaining 3.5% for that day. But you see, your gains are magnified, but your losses are also magnified, right? If you get direction wrong and you have bought this Alibaba 5 times short DLC instead, you'll be suffering losses at 5 times as well. So this 5 times short Alibaba DLC was down around 17% because Alibaba gained around 3.7% on this particular day, right? So if you bought a 5 times short Alibaba DLC, but the underlying price goes up, you will be suffering that magnified losses as well. All right. But if Alibaba went down, all right, if Alibaba corrected minus 3.5%, for example, then this Alibaba short DLC will be up by around 17%. So that's where the 5 times performance is. On a close-to-close basis, the DLCs will give you that 5 times performance of the underlying stock or underlying index daily percentage performance. Okay. So the DLCs are short-term trading instruments, all right? So definitely not a buy and hold instrument. It's a short-term trading instrument that you can, use for your day trading, swing trading, or hedging purposes, all right? So definitely short-term trading, not a buy and hold. Generally recommend that investors, trade it intraday, a few days or a few weeks, but definitely not something that you will hold on for months at end or even a year, all right? So short-term trading for you to navigate the short-term market volatility. Right, so day trading wise, I've already showed you just now the Alibaba example. You can see that our Hang Seng Tech 7 times long DLC gained around 17% on the back of Hang Seng Tech gaining 2.4% intraday during this day on 14th of March. Swing trading as well, for this XPeng long DLC 5x1, you can see that in the small little box in the chart over there, you can see that the BTMW, this 5x long XPeng DLC, was up around 300% across this 1 month period, on the back of XPeng stock, underlying stock 9868.HK, gaining 43% during this 1 month time frame. All right, so you can do it for a nice swing trade. If you manage to capture a nice trending market, you will be able to get this kind of enhanced outsized returns because of the compounding effect of the DLC, which I'll share about later on. But generally, DLCs are good for intraday trading, for swing trade, and lastly, you can use our short DLCs for hedging purposes, right? Short-term hedging purposes. This Tesla short DLC, TSXW, Tesla short DLC, gained 200% during this 1 month time frame. Just earlier this year, 1 month time frame when Tesla shares corrected minus 37% during this 1 month time frame. TSXW, the 3x short Tesla DLC, gained around 200%. Right, so you can make some of these gains to hedge your overall Tesla stock portfolio that you're going to hold for the long term. But in the short term, if you think the stock's going to correct, you can use the short DLC to make some of these gains to offset your paper losses on your Tesla portfolio. All right, so intraday trading, short-term trading, swing trade, or hedging purposes, these DLCs can help you to navigate the market volatility in the short term. Right, you saw the Tesla DLC recent just now. So this Magnificent 7 stock DLCs is something that we just launched recently, and we're very excited about this shelf. All right, so we do cover the Magnificent 7 stocks. This is the shelf that we have right now. We have a SGD counter as well as we have a USD counter. So you can choose to either trade it in Singapore dollar currency or you can choose to trade it in US dollar currency. All right, so the Tesla ones, this Magnificent 7 stock DLCs, we only have 3x leverage for now. For Hong Kong stocks, Singapore stocks, we have 5x long and short DLCs. For this Magnificent 7 US stocks, we only have 3x long and short DLCs on them. So if you want to long Tesla with that 3x leverage and you want to trade it in Singapore dollar currency, you will go for the TSYW counter. But if you want to trade it in the US dollar currency, you will go and trade the US dollar counter, which is TSTW over there. All right. So this US DLC is very interesting because a lot of people think, this is traded on the SGX securities market, right? But the US market is closed. So what happens during the Singapore market hours when the US market is closed? How does the US stock DLC work? All right. So the US stock DLC, the basic principle is still very much similar to all DLCs, where on a close-to-close basis, you will still get that 3x performance of the underlying stock. So if Nvidia moves 1%, on a US close-to-close basis, my 3x long Nvidia DLC will gain 3% on a US close-to-close basis. All right. So, but what happens during Asian hours? So let's look at this example over here. On the far most left of the chart, you can see that on the US market close T session, the US stock closed at $100 US, and my 3x long DLC on this stock is closed at $1. All right. So supposedly this US stock announced better than expected earnings result after the US market closed during the post-market session. It announced better than expected results, right? And so by 9 a.m. Singapore time, SGX market open, this US stock is actually up 6%. All right. During Asian hours, there's Asian hour trading of US stocks nowadays, and so if it's up 6% during Asian hours, this stock, right, at trading at $106 at 9 a.m. Singapore time, my 3x long DLC at SGX market open will be quoting at $1.18, up 18% versus its close earlier that morning of $1. So that's where the 3x performance is, right? Underlying stock is up by 6%, so the 3x long DLC will be up by 18%. And we'll be quoting at $1.18 in our bid and ask prices at 9 a.m. Singapore time. So if you think that the underlying US stock will continue to rise further, during Asian hours and before the US market open, right, you can get in early ahead of the US market open at 9 a.m. Singapore time and buy the 3x long DLC at $1.18. And if indeed the underlying stock continues to rise further throughout the trading day, all right, and by the time Singapore market close, just before Singapore market close, 4 p.m., 4 5 p.m., the US stock has indeed risen even further to $110, up 10%. Then my 3x long DLC will be up by 30%. All right, so from 118 to 130, you will have moved from 118 to 130 during the SGX market hours. All right, so if you bought at 118, you can sell back to SocGen 130 cents just before SGX market close for a profit of 12 cents. All right, but if you want to hold it overnight, you want to hold it past the SGX market close, right, and hold it overnight, you can choose to do so. But then you must take note that the DLC you cannot buy and sell the DLC during after SGX market hours, right? During US overnight when the US market is open, you cannot trade this 3 times long DLC anymore because it's only tradable during SGX market hours. But this 3 times long DLC will continue to maintain its exposure to the underlying US stock. All right, so if the US stock continues to rise further in the US to $115, up 15%, my 3 times long DLC will be, the value will be at $1.45, up 45% versus its previous close. But at this point, you cannot buy or sell the DLC. All right, you cannot sell the DLC yet. If you have to wait till the next morning, 9 a.m. Singapore time, if the US stock is still trading at $115, then we'll be quoting the 3 times long DLC at $1.45. Then you can sell back to us, SocGen, the DLC at $1.45 to lock in your profit of $1.45 versus your purchase price of $1.18. Right? This is what happens on a 24-hour basis for the US stock DLCs. So you have that new trading window during SGX market hours, during Asian hours, to gain exposure to these Magnificent 7 US stocks or the US indices during Asian hours, to get in early ahead of the US market open, or to react to any high impact news during Asian hours. All right, this is something very interesting for those who are trading the US stocks. This could be a very interesting tool for you, especially during the Asian hours if there's any high impact news. All right. So, for example, a case in point was the 6th November last year when Trump was won the election. You know, during Asian hours itself on 6th November when the votes started coming, Tesla already started moving. So I think that Tesla will benefit from Trump winning the election. So Tesla was up 10% during Asian hours already. If you had waited until the US market opened that day, you would have missed out on this 10% gain. But if you had bought the TSYW at time at $5.50, you will be sitting on a 30% gain already that after same afternoon during Asian hours. All right, so you can use our US stock DLCs to gain exposure to such high impact news during Asian hours as well. Right. Before I end off, I think it's very important that before you start looking at DLCs, before you start trading a DLC, you have to read up about the compounding effect feature of the DLC. All right, similar to the leverage and inverse ETFs, where we have exactly the same kind of payoff, the DLCs have exactly the same kind of payoff as your leverage. There is this compounding effect feature that all right. So the compounding effect feature of the DLCs works well for you in a trending market, in a nice trending market, but it works against you in a volatile or sideways market. All right. So the DLCs over here on the table on the left, in a nice trending market where the underlying stock is down by 1% on day one, up by another 2% on day three. So 3 consecutive of up days on the underlying, a nice trend. The DLC will give you that 5 times performance every day. So up 5% on day one, up 10% on day two, up by another 10% on day three. Cumulatively, it is up by 27%. The underlying is cumulatively up by 5% only, but 5% times by 5 is 25%, but my DLC gave me 27%, right? So the extra 2% is because of the compounding effect feature of the DLC, where in a nice trending market like that, you get that kind of compounded gains, right? Every day your gains are locked in and you get that compounded gains to give you more than the 5 times performance of the DLC. Right, so that works very well for you in a nice trending market. But in a sideways or volatile market like the table on the right, where the underlying is up by 2% on day one, down by 4% on day two, and then up, rebound back by another 7.31% on day three to give a cumulative return of 5% over the 3 trading days. The DLC, every day you get the same 5 times performance. So day one up by 10%, day two down by 20%, day three up by 37%. But cumulatively over the 3 trading days, we only gave you a 20% gain. So 5% times by 5 is 25%. But this DLC only gained 20%. All right, so less than the 5 times performance. That's where the compounding effect will not work so well for you in a volatile or sideways market like this. All right, so that's another reason why the DLCs are also not buy and hold instruments, not a long-term trading instrument, because in the long run, markets are generally sideways. All right, so please take note of this compounding effect feature of the DLCs that you have to understand before you trade the DLC. All right, so you can find out more on our website dlc.socgn.com. So visit our website dlc.socgn.com. We can find under the products tab will be our full list of 100 DLCs that we have available on the SGX, giving you exposure to Hong Kong, US, and Singapore markets. We also have the education tab over there. Education, you can find videos, you can find a handbook or write up on the DLCs, FAQs on the DLCs as well, for you to understand more about the DLCs. The compounding effect feature, you can read up more illustrations over there to understand more about trading them. And then on the far most right, you have the US market tab, where you can find the Asian hour price of the underlying US stock. So Tesla, what is it trading at 10 a.m.? because that's what the 3 times long or 3 times short DLT is tracking. All right. So you can find the Asian hour price of the US stocks on our US market tab over there, and more information about our US stock DLTs, a dedicated tab for our US indices, Nasdaq, US stock, Tesla, Nvidia DLTs under this US market tab. All right. So please visit sotgn.com. You can also contact us on our DLT hotline. It's a Singapore number, sorry. But if you can, do give us a call if you have any questions. But there's also a contact us form at the top of our website where you can put in your questions, and then my team and I will get back to you. If you have any feedback or any questions on the DLTs, please do feel free to reach out to us via the contact us form on our website or our DLT hotline 6226-2828, a Singapore number. But hopefully you can be able to this is our website, dlc.socgen.com. And the website, you can see all our DLCs over there, as well as educational information, videos, FAQ, handbook. All right, so that is about what I wanted to share on the Singapore US stock DLCs, US DLCs that we have listed on the SGX market. All right, so this one is a very interesting shelf that we have, the daily leverage certificates listed on the SGX that we think can benefit you as well over in Malaysia. I think we want Philip Malaysia for really inviting me here to share more about this product, this exciting product that we have listed on the SGX securities market that hopefully you'll find interesting, especially the US stock DLTs. So please check it out, and then please do reach out to us if you have any questions. But thank you very much, everyone, for your time and attention today. And thank you, Philip Malaysia, for inviting me to share with you more about this DLTs that we have listed on the SGX. All right, so over to you now, Derek, on the next part of our presentation today.
Thank you, Marcus. All right, so for now, I will continue with the second part of the presentation. Just to make sure, is everyone hearing me loud and clear? Yes or no? Are you all hearing me loud and clear?
Yes, can hear you.
Yes, okay, good. So then, please allow me to share my screen. Just to check, you all are looking at my slides, right? Correct?
Yes, clear.
Just to confirm. All right, good.
Clear.
Before I start, I just want to share it right now. It's just my personal opinion, personal view. It's not a recommendation or advice to participate in any stocks in Singapore Stock Exchange. All right, so I will not be responsible for any of the action that you do. So if you need any so-called professional advice, please look for a professional financial planner so that he or she can help you in doing a better analysis. All right, so please take whatever I shared with a pinch of salt. After you hear what I say, you can go and do more research and then make your own form of trading or investing decision. All right. So now, earlier, Marcus has shared about DLC, which mainly, like what he mentioned, is for trading purposes. All right. So it can be for intraday trade or it can be for swing trade. All right. What I'm going to share right now is more of an investment kind of stocks, because for me, I feel that in Singapore stock market, there are good fundamental stocks which we can hold for a long term, rather than coming in and out of them. All right. So for tonight, my time frame definition may be a bit different from Marcus. So I'll share you guys how I define my time frame. All right. When I say anything less than anything short term is anything less than 1 month. So it could be intraday trade, it could be swing trade within maybe a few days or few weeks, but less than a month. All right. Intermediate term is from 1 month to less than 1 year. Long term is from 1 year to less than 10 years, and ultra long term is 10 years or more. So whatever I'm going to share for my section, is actually good for, at least for me, long term. All right. So please do take note of that. It is very different from the DLC which Marcus shared earlier. All right. So now, ladies and gentlemen, let's talk about Singapore stock market. The index that represents Singapore stock market is actually called Straits Time Index, or in short form, STI. It's made up of 30 component stocks, as you all can see over here. 30 so-called blue chip stocks. And you can look at the very top, the top 3 in terms of market cap is actually our 3 local banks, which is DBS, OCBC, and UOB. A lot of people thought that probably it's the second largest market cap stock in Singapore. Actually, it's no. It's actually OCBC. All right. So very interestingly, let me just share. I mean, apart from we have of course Singapore Stock Exchange, we have ST Engineering. If you look through the list, we have Wilmar International, which is a commodity stock. We have REITs as well, Mapletree, Pan Asia, Comtrust, all this. All right. So let me do a breakdown of the different sectors that's in the so-called Straits Time Index. As you can see, the 3 banks of DBS, UOB, OCBC already make up 51.33%. Make up 51.33% of the weightage of the STI. That's almost half of the weightage of STI. Can you see? Then the second largest weightage is actually real estate, which include the REITs, which is the real estate investment trust, which makes up about 15.3. All right. The rest will be like telecommunication, which is 7.91. One of them, which is our Singtel. If you guys are familiar with Singapore market, we have I would say the largest telco company over here called Singtel, which makes up about 7.91. All right. So this is a breakdown of the different sector in STI. So now let's look at the performance of STI since year 2000. All right, so this is the monthly chart of STI, Straits Time Index, over a 25-year period. All right, as you all can see, if you follow my cursor, since year 2000, we have the Nasdaq bubble, so it came down, then we recovered all the way until 2008, then it crashed like all the market around the whole world. Then since the low in 2009, early 2009, it has been going sideways until finally, after almost 18 years, we finally broke the 2008 high and gone into all-time high. And can you see there's a very long, this is a monthly chart, so this is a monthly candle with a very long lower tail. That was last month, because our dear Donald Trump, he announced about the reciprocal tariff on the 2nd of April, the Liberation Day. All right, so even STI, Straits Time Index, has a very big drop, but the lucky thing is it has recovered. All right, back to almost the all-time high. All right, so based on technical analysis, I've drawn a so-called channel line. So if the so-called current rally, it can continue. All right, we may just see STI heading higher. All right, towards this upper rate slanting uptrend line. Probably we may have a chance to go rally towards probably 4,002. All right, technically. All right, so but like what I shared in my students, or with my during the public talks, ladies and gentlemen, I think we need to prepare for probably a bear market in the second half of this year. All right, but meanwhile, all right, let's enjoy this rally up before so-called a top, which I'm expecting or anticipating in Q3 this year. Just to let you know, it doesn't mean after you reach the top straight away you'll crash. No, because topping is a process. Probably you'll just hover before we see a big drop in 2026. So if we start to see a big drop, probably DLC is something that we can consider or to short the market. All right, so this is the my view about the Straits Times Index. All right. So now, in the Singapore Stock Exchange, I always say there's a crown jewel, which is called, I always say, the DBS. All right. So I believe a lot of you guys down here should have heard of DBS. All right. For those who haven't, this is a very brief introduction about DBS. It's actually a leading financial service group in Asia with a presence in 18 markets. It is headquartered and listed in Singapore. All right, DBS is in the 3 Asian axis of growth: the Great Eastern, Southeast Asia, and South Asia. And very important, DBS has a AA minus and AA1 credit rating, among the highest in the world. Not in this region, it's in the world. All right, and very important, among the 3 banks, if you ask me, my personal preference is actually DBS over OCBC or UOB. One of the reason is because DBS is at the forefront of leveraging digital technology to shape the future of banking, having named the world's best digital bank by Euro Money. All right. Ladies and gentlemen, just to let you know, whatever stocks I mentioned tonight, they are my personal opinion, and I have already invested in them. All right, and I'm in them for the long term, for investment, not for trading. I have to let you guys know. For example, recently when DBS has dropped, in fact, it has gapped down because of the so-called Donald Trump reciprocal tariff. All right, I managed to went in and got some DBS at a good price, and it has since rebounded. All right, so anyway, this is DBS, and let's look at the fundamental of a DBS. You will realize that fundamentally it is a very strong stock. All right, let's look at its income statement. All right, so if you look at the revenue or total revenue, you can see that in the financial year 2020 to 2024, it has gradually increased. And in fact, last year, it has improved almost about 10%, slightly more than 10% over the previous 2023 financial year. All right. So then if you look at its net income itself, you can see that it has been improving as well. All right. For last year, it has improved by about 12.8 or about 13%, as you can see. All right. So this is 2020, this is 2024. All right. And what impressed me about DBS is this. Look at its ROE, return on equity, from 8.723 in 2020, increased to 11.9 in 2021, 2022, 14.17, 2023, 16.7, and 2024, 17%. Ladies and gentlemen, ROE, return on equity, it shows how efficient is the company making use of the shareholders' equity capital. 17 is I would say quite an impressive number. If you know Warren Buffett, he always look at companies to invest in company with an ROE of 15, and yet DBS has an ROE of 17. So to me, this is quite impressive. All right, and of course for its net profit margin, you can see especially this recent year, it's almost 50%. Also very good. All right, and ladies and gentlemen, not only that, actually DBS is a very generous giver of dividend. Let me share with you why. Actually, DBS declared and paid a final dividend of about 60 cents for the fourth quarter last year, up almost nearly 23% year on year from the previous year of 49 cents. This year itself, those investors who are looking for income can expect more from DBS, as he has just announced in the first quarter result that a capital return dividend of 15 cents per share per quarter is to be given out to manage down its excess capital. Ladies and gentlemen, DBS have too much capital. So in excess, so they have to give out 15% extra on top of the 60 cents per quarter. Do take note of this. DBS pay out dividend per quarter. we are looking at investors can expect DBS to pay a total of 75 cents per share, which is 60 plus 15, all right, per quarter for 2025. All right, so DBS also mentioned in subsequent year, it expect to pay out a similar amount of capital, either through this or other mechanism, bearing any unforeseen circumstances. Ladies and gentlemen, based on per share per quarter, we are looking at if we extrapolate out, we are 6.8 to 6.9% of dividend yield on per year. This is in fact really quite good, at least for me. That's why for me, my intention is to hold DBS for long term, especially for its very lucrative so-called dividend. All right, so let's look at the stock chart of DBS. This is since 2000 until now. All right, so this is a monthly chart again. As we can see, the chart of DBS, I mean, this is 208. It came down. Of course, that was during the global financial crisis. But can you see one thing? Whenever it touches the support line, it will bounce up. For example, when it touches the support line, it bounces. Touches the support line, it bounces. Touches the support line, it bounces. Can you see it touches the support line, it bounces. So that's why, ladies and gentlemen, so first, we need to understand that DBS is a fundamentally very strong stock. So fundamentally, there's no issue. So at least for me, my job is very simple. I know fundamentally it's very strong. So along the way, when there's a chance, when DBS were to come close to the so-called the support line, I would choose to enter and hold it for the. You understand what I'm trying to say? Also, that means what I'll be praying is, for example, if you all can see, there's a big drop over here because it's a monthly chart. But if you look at the daily chart, it's actually a gap down. So I actually went in to buy some DBS then. So, but what I hope is later on, when the bear market is here, it can come down and touch this, probably this double support here. I'll probably go in and enter to add more. Also, actually, to invest in DBS is not really that difficult, but we just need to be patient. All right, and whenever it touches, it comes down and touches the so-called support line during crisis or during stock market meltdown. That is the best time to buy a fundamentally good stock like DBS, which give us good dividend. Or on average, the dividend yield is about 6%. All right. Also, this is how I would invest in DBS. All right. Just to let you all know how I manage my portfolio is this. Anyway, I've been in the market. This is my 26 years in the market. All right, full time. So what I do is how I manage my portfolio is I have a core portfolio, all right, as well as a satellite portfolio. So what's the difference? So my core portfolio is for long-term investment, like what? Like DBS. All right, my stocks in my core portfolio is for long-term, not for trading. It's for long-term. Is to maintain beta to achieve passive income, to give me passive income as well as a market average return. This is why I added so-called DBS into my core portfolio, because I'm holding it for long term. Because if you look at it over a long term, it's going up. At the same time, I'm receiving good dividend yield along the way. All right. Then surrounding my core will actually be my satellite portfolio. Is for trading one. You understand what I'm saying? It's for short to medium term trading. Sorry, is to seek alpha to capture above average returns. All right, is to complement my core portfolio. For example, in my satellite portfolio, I can use DLC to trade so-called be it Singapore stock or the Magnificent Seven for trading purposes to capture above average return. It is very different from my core portfolio. So do take note, for me, this is the difference. So that's why for my core portfolio, I'll be looking at stocks like DBS, all right, or even OCBC or UOB. All right. On top of that, other stocks that I look at that goes into my core portfolio will be what we known as REITs or real estate investment trust. All right. For those who are not sure, don't know what is a REIT, this is a very brief introduction. A REIT is simply a trusted company that pools together funds from investors and apply their money to acquire a group of properties that which they will then manage, develop, and later possibly sell. Once the REIT has acquired a package of properties, the REIT is viewed as a property owner, where its REITs properties are managed by an active professional manager. The manager task is to lease the properties out to obtain rental income for distribution to its unit holders. All right, so the important thing is here, at least 90% of the REIT's taxable income has to be distributed out to unit holders in the same year in which the income is derived. Distribution are paid from rental proceeds, which ignore the paper loss or gain due to revaluation. So, ladies and gentlemen, so how I view REIT is like another form of property investment. All right, it's just that it's being managed by a professional manager. All right, I'm just collecting dividend or what we call distribution. 90% of its taxable income has to be distributed out by, this is by law, at least 90%. So generally, these are good inflation hedge because they are proven to be able to increase their rental yield in line with inflation. Also, to me, I view so-called risk as another form of property investment, and it goes into my core portfolio, which I can be quarterly or half yearly receive my distribution or dividend while enjoying a decent capital appreciation. Let me give you an example. But before I go into that, just to let you guys know, Singapore Stock Exchange is one of the Asia's largest REITs and property trust market. In SGX itself, there are about 41 REITs and property trusts. All right, and on average, if you look at it, the average distribution yield is about 6.9%. 6.9%, all right, and we have a risk index. The 10-year return is about 37.1%. Okay, average gearing ratio is about 39.6. Gearing ratio, that means so-called is the debt that they, because for REITs, because they own a lot of properties, so they need to borrow money, so they have to pay, they do probably pay lend money from banks, so they have to pay interest. Also, gearing ratio measures how much so-called interest payment they have to make based on the asset that they have. A good gearing ratio should be, for me, is about between 35 to 40. All right. For Singapore REITs, there's a regulated gearing ratio limit of 50%. Do think of this. For me, I'm more kiasu. I'm looking at a gearing ratio of 35 to 40. All right. So in SGX, there's a lot of REITs. All right. And can you see over here? 23 of them are for Singapore, and it's across so-called Pan-Pacific. It has so-called across Pan-Asia so-called exposure. 9 in China, 14 trusts invested in 14 REITs invested in Japan. All right. So let me share with you guys one of the thing why I like about REITs. All right. So if you compare, actually in Singapore Stock Exchange, there's 2 REITs index, the FTSE ST REITs index The other one is actually called the iShare S-REITs Index. This is actually a correlation metric between S-REIT and other asset classes. You can see the SGX, the so-called two REITs index, if you compare to US equity, it's almost zero. That means it has very low correlationship with the US stock market. That's why REITs is a good asset class that one should consider that has very little correlationship with the US stock market. Can you see? That's why it is especially good when we have difficult time or we have volatile time, which I think is coming. That's why I have quite a few REITs in my so-called portfolio, which probably I'm going to share with you guys later on. So how do I choose so-called REITs to invest in? For me, these are some of the criteria that I look at to choose from before I invest into any so-called REITs. The first one is what I call a strong sponsor. Why a strong sponsor is important? First, for those who are not so-called familiar with REITs, a sponsor provide both a pipeline of potential properties that can be injected into a REITs and financial credibility. So the sponsor's pipeline represents an opportunity for REITs to acquire more properties in future to add to its portfolio. So some very good reputable sponsor with deep pocket will include Capital Land Investment, Maple Tree Investment, and Fraser Property Limited. So for me, one of the very important criteria for me to invest in a REIT is a strong sponsor. Of course, second and third is it need to have consistent and rising NPI. NPI stands for Net Property Index. All right, and it need to have a consistent and rising DPU. DPU stands for distribution per unit. Because when we invest into a REIT, what we want to receive, it could be quarterly or half yearly kind of distribution or dividend as a form of income, especially for those who are building up your retirement account or you are in your retirement, you need all this dividend as income for you after you stop working. All right. So the fourth one, which is what I mentioned earlier, the gearing ratio or what we call the aggregated leverage ratio. It takes the total debt divided by the total asset times 100. Like what I mentioned earlier, the regulated gearing ratio is 50%. All right, but for me, I'm looking at 35 to 40 is good enough. 50 to me is a bit too high, but the regulated amount ratio is actually 50%. All right, this measure the financial leverage of the REIT itself. All right, so this is very important. And the last so-called criteria that I look at will be actually a track record of the REIT manager. That is important. Why? Because good REIT manager use three main methods to increase its AUM or SL under management and DPU distribution distribution per unit. The three main methods is acquisition, acquiring new properties, and do rental reversion, or they can so-called do asset enhancement initiative, or what we call AEI. Or when they do acquisition means they will buy new, they will so-called bring new property into a REIT. This will immediately increase the number of properties in a REIT portfolio and bump up its AUM. Right? When they do rental reversion means to increase in the per square foot rental rate for the REIT property compared to the prior period. So a positive rental reversion are beneficial for the REITs as it allows it to increase its rental income over time without relying on acquisition. Yeah. Then the third is what we call AEI, which is Asset Enhancement Initiative, where the REITs will spend a sum of money to upgrade, refurnish, or renovate a property. This enhancement will seek to improve the accessibility and attractiveness of a property to entice more tenants and may improve the gross floor area of the property so that its NLA can increase. All right, so for these three measures, should these three measures be successful, they can bring a higher level of rental income for the REIT, which in turn will mean higher net property income and higher distribution per unit. All right. So now, one of the REITs in my core portfolio is actually this REIT called Parkway Life REIT. It is my personal favorite, which I've hoped for quite some time. So let me just introduce to you all what is this Parkway Life REIT. All right, it's actually established by Parkway Holding Limited. All right, its sponsor is actually IHH Healthcare Berhad, a strong sponsor. It is IHH Healthcare is actually an integrated healthcare provider with a presence in Singapore, Malaysia, Turkey, India, and China. So a very strong sponsor. And for Parkway Life REIT, they actually have 3-star so-called hospital in its portfolio. One of it is probably, if you have visited Singapore, is what we call the Mount Elizabeth Hospital property. The other one is Glen Eagle. And the third one is the East Shore Hospital property. All right, so generally, Parkway Life REIT is actually a so-called it invests primarily in income producing real estate that is primarily used for healthcare or healthcare related purposes. All right, so let's look at its asset value by geography. 65% of it is actually in Singapore hospital, the 3 hospitals that I mentioned earlier. Then the 28.1% is in Japan. They have a nursing home in Japan as well. And last year, they actually penetrated into the France market, whereby they bought over France nursing home. This is about 6.6%. 0.2% is actually in Malaysia, but recently they already diverse away their portfolio in Malaysia. Also, right now in Singapore, Japan, and France. All right. So now, what I really love about Parkway Life REIT is this. It has an uninterrupted recurring DPU. DPU stands for distribution per unit growth since its IPO. No, since its IPO in 2007 until now. Can you see its DPU, its distribution per unit, has grown steadily at a rate of 131.6% since its IPO. This is very, very impressive for me, because as a so-called a unit holder of this REITs, I want to receive consistent, not only consistent, as well as increasing distribution or dividend. And this is what I see in Parkway Life REIT. All right. Then let me this is let's look at its first quarter financial results. Can you see its gearing ratio? All right, it's 34.8. Definitely less than the 50% regulated gearing ratio, and it's between the 35 to 40% that I'm looking at. All right, and its interest cover is 9.8 times. This is very good, because interest cover means the amount of money they have to spend to pay the interest divided, that means how much money they are making over the so-called the amount they have to pay for interest. That means they are making 9.8 times more income to pay for the interest. This is very good. For me, anything more than three times is good already. But for Parkway Life REIT is 9.8 times. So I'm also impressed. All right. So apart from very good uninterrupted recurring DPU, ladies and gentlemen, this is the so-called price chart of Parkway Life REIT. Look at it. All right. Since year 2008, I mean, it was listed in 2007. Since 2008, it has been going up and up and up and up and up. Can you see? So while I'm collecting my consistent and increasing DPU, I'm enjoying a nice capital appreciation as well. Can you see that? So my job is just whenever there's a market crash or there's a market crisis, I will then go in and live it when it's near to support line. Because I understand that fundamentally it's very strong. So my job is to decide when to enter into Parkway Live REIT. And to me, the easiest way is whenever it comes down to touch the support line, I'll continue to act. Because ultimately, can you see, all right, Parkway Live REIT, in terms of price, it has been going up. And very important to me is it has went through the 2008 global financial crisis. Also, the REIT itself understand how to ride through a crisis. And 2008 global financial crisis, is not any small crisis. It's a very serious crisis, and it has pulled through it, and it has nourished. It has performed very well since 2009 until now. Can you see that? So my job, like what I say, is very simple. Whenever it comes down and touches the support line, I'll just go in and add on to more Power Line REIT into my so-called my core portfolio, and I'm going to hold it for the long term while I continue to enjoy consistent and rising so-called dividend or distribution. Can you see that? All right. Now, another sector of REIT that I'm interested in is this sector called AI. I believe a lot of you guys really hear, see, every day, everything is about AI, right? So, ladies and gentlemen, let me share you guys what is the potential of AI? Why am I so excited about it? According to PricewaterhouseCoopers, it says that the global GDP by 2030 could be 40% higher than today as a result of AI. The equivalent of additional US 15.7 trillion, making it the biggest commercial opportunity in today's economy. Also, to participate in AI, of course, we have the Magnificent Seven. The Apple, Microsoft, Google, Amazon, Nvidia, Meta, Tesla. That's one way to participate in the AI. Another way to me is to invest in data centers. Because to run AI, you need a lot of data, and data need to be stored and run in data centers. You understand what I'm saying? And that's why I'm very interested. In fact, I have this stock. In fact, I have, just to let you all know, I have DBS in my core portfolio. I have Parkway Live REIT in my portfolio. I have Kappa DC REIT in my portfolio. So what is Kappa DC REIT? It's the first pure play data center REIT listed in Asia on the Singapore Stock Exchange. Its investment strategy is to principally invest directly or indirectly in a diversified portfolio of incoming producing real estate assets, which are used primarily for database purposes in key data center hub across Asia Pacific as well as Europe. Its sponsor is actually Kappa, which is a conglomerate over here in Singapore, and is managed by Kappa DC REIT Management Private Limited. Also, it actually has a very strong sponsor as well. So, ladies and gentlemen, let's look at the performance of these REITs. So, apart from so-called getting consistent dividend yield, you can see since 2015, this Capital DC REITs has been enjoying so-called capital appreciation along the way. Can you see that? Or same like Parkway Life REIT. Or I know Keppel DC REIT is fundamentally stable. So my job is to decide when to enter. So when to enter is whenever Keppel DC REIT touches the so-called long-term support line. Anyway, this is a monthly chart. These are monthly candles. So once it touches the so-called the support line is where I will enter to add on more of my Keppel DC REITs. As I enjoy a consistent dividend distribution while decent so-called capital appreciation to ride on this mega trend of this the AI market. Apart from investing in the for example the chips of Nvidia or the AI application of Apple, all these things. So this is another way to participate in the AI mega trend is through Keppel DC REITs, which is listed in the Singapore Stock Exchange. All right. So that's why, ladies and gentlemen, all in all, I share you guys for me my 3 personal investment in my core portfolio. Just to recap, DBS, which is a banking giant, fundamentally very strong, right? And going forward is giving 75 cents Singapore 75 cents per quarter per share or dividend yield, at least for this year. Maybe for the next 2 years, if nothing goes wrong. All right. So of course, I also share about the Parkway Life REITs as well as the so-called the Keppel DC REITs, which are 2 good REITs that's also in my core portfolio to give me consistent passive income with a decent capital appreciation so-called along the way. All right. So you can see this is how I construct my core portfolio. And then on the other hand, for my trading, for my satellite portfolio is more for my trading purposes, which can include DLC, which is shared by Marcus earlier, or trading any other base Singapore stocks. Actually, please don't think that Singapore stock is slow and steady. You can also do trading one. Let me just share you one. There's this company called Centurion. All right, it's actually a leading provider of purpose-built workers accommodation asset in Singapore, Malaysia, and China. Student accommodation asset in Australia, the UK, US, and China, and built to rent asset in China. Now let's look at the chart of Centurion. Ladies and gentlemen, isn't it beautiful? Can you see it's trending up very nicely? Once it touches, this is the 50-day moving average. So it touches the 50-day moving average, you'll just continue to go up, touch and go up, touch and go up. Now it is at the resistance. Once it can break this resistance, probably you have a potential to go up further. So this is a stock that we can trade in Singapore Stock Exchange. All right, so if we go back to my earlier slides, so can you see DBS, STN is actually a so-called a big component in STI, which is about 24.7%. All right, and then we have Parkway Life REIT, as well as the Keppel DC REITs. Maybe you feel that this is a bit slow and steady, but of course they give good dividend. Then you probably can look at this company called Centurion, which to me is very good for trading. Also, this is how I built my portfolio for my core position as well as my satellite position. All right, so I've almost come to the end of my sharing. So If you feel that I've added value to you guys, if you want to follow me in my future view about the market, all these things, you can take a picture of this QR code and follow me in my Facebook page. All right. So without further ado, I'll pass the time over back to the host so that we probably can do some Q&A. Also, back to you, the host.
Yeah. All right. Thank you, Mr. Derek and Mr. Marcus, for your insightful knowledge sharing. So now let me share back my slide for a while. At the same time, you all can type your question in the Q&A box. I mean, any question you wish to address to our speaker tonight, welcome to do so. All right, so Q&A session. I did saw one question in the chat box. What is the best platform to buy Singapore stock for Malaysians? Basically, Philip Capital did
I think
offer.
the answer is very obvious. Is
Yeah,
Philip
yeah, but
Capital correct? Lah?
yeah, Philip Capital did offer. Yeah, but I mean, for speaker also agree with me, right? So the answer is only yeah, Philip Capital then. Yeah.
No, no. Allow
Um.
me to share something,
Oh,
ladies and gentlemen.
yeah.
I'm a Singaporean,
Mhm.
in case you all don't know. I'm a Singaporean. Like what I mentioned earlier, this is my 26th year in the so-called financial market full time. And I can tell you, Philip, I've used Philip from my very first day until now for the last 26 years. This year is actually Philip's 50-year anniversary. I know because I'm it, Philip is actually originated from Singapore, in case you all don't know. So for my last 26 years, I've used Philip. It is very stable. It is one of the biggest so-called broking house in Singapore. This is what I can share with you. All right. So back to you, Leong Wee.
All right. Thank you. So we have one our speaker having experience, in this particular uh experience with Philip. So well, we have a very good testimonial here. Hopefully, it answer your question. All right. Next question. Mr. Derek, last time you said sovereign debt crisis will happen in 2021, 2022, but at the end, actually, it didn't turn out. Do you know the possible reason of this?
Sovereign debt. I mean, it doesn't concern tonight's topic, but the thing is, sovereign debt crisis is a process. It's not a one-time thing and it will explode. If you look at it, what happened in 2023? Why do we have the example, the most recent one, 2023? We have the Silicon Valley Bank collapse. Why? Because they hold a lot of so-called US Treasury bill, which the prices drop a lot, and they bought a lot. So because of it, there was a bank run. That's why Silicon Valley Bank collapsed. It's only Federal Reserve came in and saved so-called a lot of banks then. So like what I say, sovereign debt crisis is a process. It's not a one-time bomb that you explode. To me, it's coming, especially this year, especially the second half of this year, whereby the so-called the US has almost 7 billion worth of treasury they need to refinance. That's a huge amount of money. That's why Donald Trump has to so-called come with tariff, think of different way to make money, and he's trying to force the interest rate to go down because most of the so-called the treasury uh, is the 10-year treasury yield, and it has been turning up. In case you don't know, US is spending almost $1 trillion to so-called pay all this interest, which is about the budget for its defense. So the thing I want to say is sovereign debt crisis is slowly imploding. It's coming. That's all I can share. Do watch out for it. All right.
All right, thank you. hopefully answer your question, James. Any more question from the floor? All right, we have. Oh, terrific. All right, we have one last one perhaps stock recommendation, but actually he asked for the US stock. So do we? I mean, do we have any stock recommendation? I mean, for US?
Sorry, I do not have any financial license, so I cannot do any stock recommendation. All right.
All right.
Probably if you all need any stock recommendation, you can look for Leong Wee or any so-called uh, dealers or reminders which are licensed to give you recommendation. I cannot. All right. I can use whatever I share tonight. For example, the DBS or the Parkway Life REIT or even the FDC REITs are my own investment. Just to let you all know, my DBS, P Life, as well as Keppel DC REITs, I'm using Philip, they are in my Philip account. All right. Uh, uh, for those who are interested, probably a big trend I think we can all look at will be AI, the so-called mega trend. You can go into that direction. Probably if go in that direction, you can look at the Magnificent Seven, and maybe you can use the DLC, which is introduced by Marcus earlier, to trade them. All right.
All right. Thank you. We have
But one thing,
quite
one
interesting.
thing
Yeah.
before I go on, one thing I want to share is this, ladies and gentlemen, regardless whatever it is, I think we are nearer to a bear market than any time.
Mm-hmm.
We did not go into a bear market recently. No, it doesn't mean market dropped 20% from a high. That means it's a bear market. Then it goes up from the low, from a high, 20% is a bull market. It doesn't work like that. Recently, the big drop. Anyway, S&P 500 already turned green for year of date, YTD already. A lot of people say, oh, the bull market is back. No, we are not. We didn't buy market. But one thing I want to forewarn everyone is, ladies and gentlemen, I'm looking at a high probably in Q3, during the Q3 window. That's why let's ride this trend up, or probably into Q3. Then it probably there will be a topping process before we go into a bear market. Let's enjoy this last leg up, or before the bear market comes. All right, this is what I will share. All right, back to you, Leong Wee.
All right. I found one quite interesting question. Perhaps we treat it as the super last one. Well, the increase of long-term interest rate in the future affecting rates. Affecting rates. Yeah. Increase of long-term
Yes,
interest rate
for
in the
REITs
future
itself,
will.
yeah,
Yeah.
REITs, just to let you all know, REITs is hybrid between stock and so-called bond. All right. Why is it acting like a bond? Why? Because it gives dividend, be it per quarter or be it, it's also like a stock. That's why you can see the stock price goes up. So the thing is, because I do cycle analysis, I can tell for next 20 plus year, we probably will see high interest rate. This is, I would say, uh, not so good for REITs, because REITs, they need to borrow a lot of money to go and acquire or accumulate properties. So when there's high interest rate, they have to pay more interest charges. So to me, going forward, that's why for me, my REITs invest in more than just Parkway and so-called Keppel DC REIT. I invest in more than that. For example, Fraser and which I like a lot also. My view about them is this: I'm building up for my retirement. So I want to accumulate them along the way so that I can have quarterly or half yearly income into my core portfolio. I do not have a very high expectation of it going in terms of capital going very high up. That's not what I'm looking at because of the high interest rate going forward. You understand what I'm saying? So I need to manage my expectation well. I invest into REITs going forward is my expectation should be I want to receive consistent, hopefully increasing dividend per quarter or per half yearly with a decent capital appreciation, not explosive capital appreciation. We need to understand that. Also, this is how I view my REITs investment inside my core portfolio. All right, this is what I can share. All right.
All right, thank you, Mr. Derek. So basically, that's it for today's webinar. So just to share this with you all, yes, our Telegram channels. So if you are interested in our stock futures or safety, you all can scan our QR code for our Telegram channels. And that's it. That's it from us. Thank you, everyone. Thank you for your time tonight, and special thanks speaker, Mr. Derry and Mr. Marcus. Thank you.
Okay, thank you very much. Good night. Take care. Bye-bye.
Bye.